Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. The Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started.
So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on.
Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris.
So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains, but not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank, but all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. Your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
He's been on the fence to come to PMC Money Tank. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool. It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Steven, Jonah, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. There's a lot of people that I talk to, their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event, you don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 9:30, 10:30 Eastern Standard Time. Do it live!
Right, there we go. What's going on, everybody? Another week, another What the F happened. Excited to be back. Last week we were out in Think Tank in Birmingham for the IBC practitioners group. So it's exciting to kind of come back on a high note of everything that's going on. But there's some low notes we're going to talk about today, and that is the World Uncertainty Index. Who knew they had a World Uncertainty Index? But I guess Davos out there, they all fly their private jets, and they just kind of come up with these things. Hey, let's call it the World Uncertainty Index. But anyway, it's a real thing, and it is right now at a historic high, which should be no surprise to any of you. There's a lot of uncertainty about tariffs, uncertainty about relations with other countries, such as Iran. We're going to hit on Iran today, and uncertainty of what does AI actually mean for humanity in the future. Reading a lot of books on that. That's an interesting topic, but it's also an interesting topic that AI has been having some serious sell-offs. And not only is AI having a sell-off, boy, is Bitcoin looking like somewhat of a good buy right now, or I don't know if it is or not, but it's definitely selling off, sitting around 67,000 as of now, and gold is off its highs. So you got all these things going on. We're going to hit on all these different topics, but before I do that, I want to turn it over to my my partners in crime here. We got Mr. Snaggy coming in from Florida and Mr. James coming in from the studio out back. What's going on, gentlemen?
Hey, what's happening? Hey, Chris, what's going on? Good to see you out there doing some snowboarding over the weekend. It looked like you and your daughter had a blast out there on the mountain. It looks like James riding in on a Harley Davidson this morning. What's up, St. James? How are you, man? But yeah, everything's good down here in South Florida. We have opening weekend for our Little League on Saturday, so super stoked to launch the spring season. Other than that, man, just like you said, a lot going on in the news, a lot going on with the markets. Looking forward next weekend. I'll be in Tampa, Florida at the Money Game Live event with Hannah Kessler, talking about the markets, the economy, how what we do with Be Your Own Banker and the Private Money Club can kind of bring some certainty into these uncertain times. So looking forward to sharing that over in Tampa. And quite honestly, this week, I feel like all the news has been AI, robots, and technology. So looking forward to getting into some other topics on What the F this morning. So with that, I'll turn it down to Mr. Hell's Angel himself, St. James. What's up, James?
Oh, you're muted.
Oh, no, your mic's not on, dude. We can't hear you,
we
James.
can't hear you.
I don't think you're muted, but your mic might not be on. So we'll
oh my goodness.
Get those technical difficulties at the BYOB headquarters sorted out and be back to you.
What the heck? Yeah.
There you go. We got you.
All right, we back on? There we go.
He's back on. All right.
All right. Well, what's going on, WTF? And thanks for the update there. It's kind of weird that the mic wasn't working. Somebody's trying to sabotage me. But you're right, Nagy. There has been a lot of talk about AI and the impending the AI bubble and certain stocks that are moving and certain stocks that are not moving. We're going to be sure to get into that. It's been an absolutely busy quarter. Q1 is always busy for the family business as we're deep into taxes and prepping people's taxes from all over North America. So definitely juggling a lot of things right now. But one thing that we always want to do is make sure that we provide you with all the news, both main you may have missed, and give us all of our takes. So we may go back a little bit here and there, but it's going to be a lot of fun.
Now, Chris.
That's hilarious. Yeah, what I was saying is, well, we'll dive right into that after we talk about the economy. All right, well, let's get into the economy. One of the big things about the economy is what I opened with, the uncertainty. There is so much uncertainty out there. It doesn't matter what you look at, where you look, all the indicators are showing you that people are just feeling this. We see it on hundreds of, different occasions, where we talk to people. People are just, number one, like financially exhausted. With everything that's been going on, things are tight. The inflation, since COVID is driven the price of things wild, or actually just made your dollars worth less, which makes it appear like things cost more. But all those things on top of, just the constant. I mean, I was just talking to Steven and I was saying, I barely look at the news anymore because it's kind of, you don't even know what to focus on. It's so fragmented in all over the place. It's just hard to even watch it. And I think that's the case you're seeing with a lot of people. And the economists are calling this a multi-layered crisis. And I think that's probably well put. And when we talk about that, we're talking about the ongoing trade wars that are happening. The trade wars that Trump, kind of keeps using the tariffs as a weapon, I guess you would say it, with these other countries to get what he wants. And listen, like, love it, hate it, it has worked. I mean, he has been able to get in almost, kind of the reality distortion field, like Steve Jobs stuff. He's been able to get the impossible done with some of these countries, but it's going to come at a cost. And we don't really know what that cost is, but we're starting to see some of the geopolitical fragmentations. I talked about this a while ago. There was a great book, and if any of you are looking for one, it's called The End of the World is Just the Beginning. It's all about geopolitics, which I know a lot of you are like, oh, that sounds really boring. It was actually fascinating, but it pretty much told the tale of exactly what's happening now. Now, that book was written many, many years ago, but it pretty much laid the foundation of where we're at right now geopolitically. And with Iran not responding back, that's an interesting one, going on. And then you got Europe. I think they're just doomed, but that's just my take on it. And then you got the Middle East, which you can love it or hate it. Every week it seems to be something different. But all these debates that are going on with all of those make this multi-layered concern, right? And the last thing is, what is the future of the Fed? The Federal Reserve, which is not federal at all. And I think Satan sits at the helm there. But let's hear what Stephen and James have to say about uncertainty, but the World Uncertainty Index.
What do you got, James?
Well, the World Uncertainty Index was developed in 2018 by a number of leading economics forums and professionals. And it's, measuring how confident people are in the economy. Now, obviously, when we have a catalyst such as this current administration shaking things up, people are going to feel a high level of uncertainty. Am I going to be able to export or import my goods? How's it going to be related in terms of how it's going to affect my business? And of course, we're still feeling the remnants of COVID-19, like Chris had just recently said. But when you take into account like some of the battles that have been going on throughout the Middle East, and obviously Ukraine, Russia. Well, the idea is that some of these things aren't new, meaning there's always been some level of conflict throughout world history. The thing is that companies now are having trouble navigating these waters and creating harder situations for them to be able to forecast. So should we forecast for a broader and more robust economic future? Are things going to get a little bit more constricted and we should start dialing down some of our goods? And we've seen, as a lot of you have been paying attention to, things as a divergent economy where one part of the economy is going up, the other part of the economy is going down, the K-shaped economy. So within all this, people are like, we don't know what to go to. And a prime example of this is the food business, where you have a company like Chipotle, which is saying we're going after high net worth income earners making over $100,000 and more. Before, they were just like, hey, we've got great food, come in for $12 to $14 per burrito and you're good. Whereas McDonald's has started to thrive at a more value-based offering for their foods, and where they're offering a $5 sub menu. So we're seeing this divergence in this economy. And whenever you have divergence, whenever you have that uncertainty, we have confused buyers. And what that could also mean is that people start pulling back on their spending and hoarding their cash even more.
Yeah, I mean, this reminds me a lot of the fear and greed index. We used to talk about it a lot on What the F happened actually back a few years ago when we were really tracking, the markets when COVID was going on and what people's thoughts were. And so it just reminded me of that right there. So I just pulled it back up since we haven't looked at it in a while. But the fear and greed index, the investor sentiment out there. And right now it's looking like they're at a 7 fear and greed, or there's 7 different fear and greed indicators. And it's kind of in that fear range right now. And you can see kind of how that's been affected over the last year or so. So it's gone from, greed, it's coming up into that fear territory. So kind of interesting to keep an eye
Absolutely. On that. And Nagy, I just want to bring this up, and you guys chime in, please. But if you notice, both of those outcomes are both negative. Fear, oh my gosh, everything is bad. Just hoard your money. Greed, people are making too much money. What about prosperity? What about, we're pretty cool right now. Do you see how that fear and greed index is almost like 2 negative outcomes just by the wording that they use for that?
Yeah.
Sounding like a Republican now, James. I like it.
Yeah, capitalism at its best, right? I love that. I didn't think I'd hear that from James, but there we go. You know, one of the things that's interesting right now, and this is, I always think of this as like, you know, a deer frozen in headlights. You know, why does a deer sit in the middle of the road staring at your headlights when it's going to get killed, right? It's kind of the same thing that you're seeing right now with this fear. You know, there's so much fear out there. We hear it, we see it, but what it's got people doing is just freezing. They're not doing the right things. They're not making the right moves because they're literally frozen in the headlights, and they don't even know what the headlights are. Much like a deer. Deer does not know that those two lights coming at it is a car that's going to hit it and probably injure or kill it. But the same is true for how we do things. Now, let me give a personal example. On my flight home from Birmingham, the stewardess asked, you know, what my hat meant. And I explained it to her, and then she started talking, we started talking, and, she got into her 401k. She's like, yeah, my 401k has been up like 28%. It's been doing really, really well. I just don't know what to do, and I said to her, I said, well, you got to know when to hold them and you got to know when to fold them. And right now would be a really good time to readjust or reposition. We're going to talk about that a little later in WTF here with Warren Buffett and how he's doing some repositioning too. And I think a lot of people, what they're frozen on is, they've done so well in the stock market over the last decade, even longer, because this has been the longest bull run, that they just think that it's going to continue, but they inherently, like that gut feeling, know that something is going to happen. But they're thinking, okay, but I've done this well up to this point. Maybe I should just stay the course. But the gut feeling says something's going to happen. That's that frozen. And when I talked to the lady, and on the airplane, the stewardess, I said to her, I said, listen, I said, you very well might want to make sure you're not overweighted, because she was talking about some of the positions. And I'm like, yeah, but if you've been in these positions for a while, what people don't realize, you may have started off with 60%, risk assets, or 60% stock and 40% bonds. That might have been your intention. But because the market's gone up so much and the different positions you're in have probably gone up, you're probably way overweighted. What was 60-40 is probably now more like 80-20. You have 20% bonds and 80% in risk on stocks, right? And that's a dangerous position. You could be overweighted in riskier assets, not even knowing you are, because just market has overweighted your portfolio. So, I think it's really important that people get with a good financial advisor, much like Stefan over here, at Private Money Club Wealth Advisors. That's what they do, is give advice and just look at it and say, okay, should I make some changes? Because a lot of people are frozen in the headlights. They're not making changes. And what's going to happen, like it has so many other times in history, from 2008 to COVID to the .com, and I could go all the way through them all. They don't do anything because they were frozen. Then the event happens, which it happens very quick. Any of you that are old enough to remember the recessions of the past, remember how fast that happened? Literally in 1 week, your portfolio could be down 30%, maybe more. So you don't have time to really react then, because it literally just becomes a fight or flight. So it's best to really get a good look at what you're doing now. Get with a good fiduciary advisor, someone that can give you holistic advice on what you're doing, like I mentioned, PM or Private Money Club Wealth Advisors, and just make sure you're not in the danger zone. I love the danger zone from that one thing, the Crazy Hot Matrix, the danger zone. Remember that one? That's a good one. But anyway, that's all I had to say. And I went a little bit long on that, but let's go to one other thing, which I think is really important, is the volatility that you've seen in the stock market, primarily in the tech stocks. But if you look at the tech stocks, and we'll call them the tech industry, or we'll call them the AI industry. When you look at the S&P 500, there are 7 stocks within seven of the stocks within the 500 stocks that make up the S&P 500, the Standard & Poor's 500 largest stocks. 7 stocks are running the show there. Literally. I can't remember the numbers, and it might even be higher now. It was like 60% of the gains within the S&P 500 come from 7 stocks. And some would argue that it's 10. And they're all tech based, all AI based. And I don't know, I get like freaking the hair on my arm stands up, because I remember back to the .com crash and how this looks a lot like that did before the crash happened. And you're seeing these major sell-offs. As a matter of fact, on the 12th of February, just last week, you had a 600-point sell-off on the Dow Jones. Okay, the Dow Jones is different than the S&P, but very much so an index. So you've got these major sell-offs happening. You've got major sell-offs happening in Bitcoin. You got the dollar floating around. You've got gold pulling back. You got all these different things. These are all signs, folks. Signs that when you see the lights, get out of the road or you're going to get hit. I don't know. What are your takes on all this AI fear, this talk of, what is AI? Is it a bubble? Even Altman said that it's in a bubble. And he's basically kind of one of the main dudes over there at OpenAI, your Chat GPT folks. What do you guys think?
Yeah, I mean, you brought up a lot of great points there, Chris. There is a lot of fear in terms of the AI market. The thing is that there's such a massive amount of capital that's being poured into developing data centers and the future values of what some of these AI models and large language models are going to bring. There's some fears. If, let's say, ChatGPT, which has a tremendous amount of debt, fails to produce actual profits, who's going to bail them out because all this money's been inflowed here? We also see that in terms of the Magnificent Seven, that there has been a bit of a meltdown. And we talked about this last week on WTF. We said there is a Super Bowl curse, that when you see a tremendous amount of advertising in one concentrated industry, and this Super Bowl was AI, there's usually a catastrophic failure subsequent to that. We saw that with the .com bubble. We also saw that with the crypto bull that was about 2 to 3 years ago. So is this the actual chickens coming home to roost, and we're seeing that how overhyped AI is? There's also another point to consider as well. When we're seeing this reduction in the Dow and the S&P, we're also seeing is that people aren't necessarily pulling their money out of the markets, but they're putting into more traditional stocks that have good fundamentals. One of the strongest stocks that have been producing us year to date has actually been Caterpillar, the industrial equipment manufacturer who's been providing diesel generators obligatory for a lot of these data centers, but they're seeing record profit margins. We're also seeing companies such as Corning, which creates fiber optic cables, getting massive profits and seeing that they have a strong business model. Now, of course, there will be some pullback because that's just the nature of the game. And we have seen some foundational stocks and funds such as silver, things holding in gold, seeing a bit of a correction as well, but it seems to be knee-jerk as opposed to something that's going to be long-term substantial. So while I'm not providing any long-term advice, I think it's going to be interesting to see where we're going to see this, where we're going to see people park their money, and making sure that we educate people as best as possible on how to be as responsible with it.
Yeah, something I wanted to bring up. I read an interesting article when you talk about these different companies and how they're looking at AI and approaching AI, and what those investments look like for themselves. And I found a really interesting write-up on Apple, and I'll share this and kind of walk through it real fast because, I was talking about how Apple's genius move to win AI was to literally do nothing. So they went out there, and if I look at this graph right here, if you guys can see this, it's showing the capital expenditure since 2015 or so. But, if we look at this last year, since 2024, you can see Meta, which is Facebook, Alphabet, which is Google, Microsoft, and Amazon have all spent plus 48, plus 95, plus 89, plus 42% year over year on their CapEx, which is all going towards AI and technology spend. You can see Apple was actually negative 19% over this last year. And they literally just sat all of this out instead of spending hundreds of billions of dollars on AI CapEx. They just said, okay, we'll just keep doing what we do. And then they sat back and they said, we're going to pick a winning model. So if you follow what Apple does, they decided to partner with Gemini. They chose Gemini to build out with. And now they're coming out with all this AI and Siri and their AirPods, their glasses, their all their different capabilities in the iOS this year. And they just found someone to partner with instead. So it's interesting to see how some of these companies are spending money. And when you look at how the stocks are doing and the value of these companies, I mean, Apple's up there with the best of them. I think, according to this, still the second most valuable company in the world, and none of that AI risk has been taken. So to me, that's an interesting kind of way to look at it. And, the opposite side, when you look at like what Elon Musk is doing and his approach to it, he's gathering so much data through his other companies. I mean, if you look at his cars with the self-driving. I mean, basically all those cars that are doing all those self-driving, that's just data that they're bringing in and analyzing and using to develop new AI language models and everything. And, you know, Elon came out this week with a really wild statement, but he said that in 2017, they are on track right now to be able to sell cyber cabs to the general public for under $30,000. So think about what that means for a second, Chris. You can buy your own very own cab, taxi cab, the cyber cab for your house under $30,000. This thing will drive itself to your house, will park in your driveway. It's there anytime you want it. If you're at a bar, you're drinking, you get on your phone, you say, hey, cyber cab, come pick me up. It drives by itself to, you know, you want to send your kid to your friend's house, put them in the cyber cab, and sends it for under $30,000. You can own your own personal cyber cab. And he's saying that's going to be available in the next 2 years. So this stuff's accelerating incredible paces. And if you watch what some of these robots are doing right now, these robots are like, I mean, they're maneuvering better than humans can. They're doing gymnastics and stuff now. It's like this stuff's accelerating very, very quickly. But it's interesting to watch how these companies are kind of approaching it and where they're putting their money where their mouth is, so to say.
Absolutely. But we have to understand, I know you're a huge Elon proponent. I know you love your Tesla, but Elon is so far behind the game. And hopefully we get a chance to talk about that in comparison to Tesla versus Waymo and some of the other autonomous driving companies out there. I agree he's doing a lot, but we're looking at Tesla starting to pivot away from cars. They actually canceled the Model X and the Model S, as we talked about last week, and they're going to start building robots. And if the public start seeing Tesla as a technology company and not an automotive company, maybe they won't be overhyped. But if you talk to 10 different analysts and 10 different quote unquote business experts about the Tesla stock, they're going to say it's massively overvalued. And while
every company in the stock market's massively overvalued, you can't just single out Tesla. And keep in mind, Waymo actually uses remote people to help assist their self-driving cars. So they're not even full self-drive. Like they're using people in India and these call centers that are driving you around. So to say that their technology is better than the Teslas is wild talk.
Well, Waymo is actually active in a lot of major cities across America. And having a human backup as a, you know, just in case of redundancy is something I fully support. I mean, we are not at a point of technology where we can have fully autonomous driving, but we have seen that these autonomous cars have driven a lot safer. And I'm not saying Elon is not going to do it, but he's known to be a puffer. He's known to say, oh, you're going to have your Cybertruck within 2 years. Well, the Cybertruck came out in 4 years. Well, he said, oh, this Roadster is going to come out. And it doesn't come out for, we're still waiting on this Roadster, you know?
Elon's a visionary and a dreamer, much like somebody else I know on this stream right now. And sometimes the vision gets ahead of what's happening, but oftentimes
quite often.
And so, hey man, sometimes you need that person that's going to see that and everything going on with SpaceX. I mean, we could go on and on here, but
I thought this YouTube comment was pretty interesting. And I think as we dive deeper into this, like that robo-taxi and all that other stuff, I mean, just let's not forget there's a kill switch somewhere. And, you know, when you go all electric, like, you know, I have a Tesla now. Every day I drive it, you know, some things I love about it, other things I hate about it. So I'm like 50-50 on them. You know, Steven, I know you love yours. I'm like, I don't know. I'm still just not an electric car person. And at the end of the day, it always sits in the back of your mind that like, if something ever went wrong, like they could just flip the switch, you know, just shut it off. And I don't know. I'm just like Shauna said, I'm not buying it. And I like some of these other things that are coming in, reports saying the AI would be able to take over trade jobs by 2030. Not so sure that's going to happen. Hannah came in and said, what do you think about the water bankruptcy due to the AI consumption? You know, this is actually talked about in the book, The Empire of AI, on how as data centers come on and you know, become bigger and bigger and more energy, that they use more and more water. But if you really dive deep into the water issues, now they've found ways to recycle the water, which obviously was just a matter of time. So they basically think of it as you got this giant reserve of water and it just continuously just recycles that and uses it for the cooling. So I think technology will mitigate any of the water bankruptcy issues that are being talked about. I think that's more your I don't know, just doomsday kind of thought, but it's definitely a concern because AI, you know, data centers require tons of water in fresh water to cool. But just like anything else, I mean, listen, I know this is going to kind of come as a surprise to some of you, but the poop that comes out of you and goes into your toilet is also what becomes the drinking water and the water we shower with. So I'm just saying, like, we figured that out. I think we can figure out how to recycle water in these AI, data centers. Just saying.
Yeah, the water recycling is a big point right there. One point that's getting glossed over, I did a deep dive when Nagy brought this up a little while ago because that was news to me as well. It's just that there's a lot of heat that is generated. So when you cycle this water through the AI data centers, it's still super hot and it just doesn't sit in a reservoir somewhere cooling off. And if it does, guess what? It's still consuming a lot of energy. So granted, you are not using as much water, but they still have to pipe in water. It's more of a water reduction in a closed loop model than an actually a fully closed loop. Don't worry about it, everything's a-okay. It's been kind of glazed over. It's been kind of polished, so to speak, by a lot of the big tech giants out there. And I encourage all of you guys to look it up as well.
Yeah, but that technology will catch up as the AI data centers build out.
Exactly. Absolutely. But here's a caveat. I just want you guys to check this out. Take it for what you will. We've pulled back from battery technology, higher levels of electrical progression. Meanwhile, countries such as China have moved forward in this. We have solid state batteries, higher density data models. They're pushing forward to that, where this current administration has been pulling back. We've been pushing more towards fossil fuels. So if we don't move forward in some of these emergent technologies and energy sources, we will fall behind in making more efficient data centers.
See, this is where you go into that weird place. I don't mean to cut you off, but private business is what drives innovation, not the government. So, like, I know you want to throw, the Trump administration under the bus and say, oh, they totally took the eye off of the green initiatives in the solar and all this stuff and the battery. I get it, but innovation from that level that you're talking about doesn't come from the government. The government is completely and has always been very inefficient when it comes to innovation. But companies, private industry, capitalism is what drives that. And from my research, there is no slowdown in innovation of batteries and technology with batteries. So, you can't now here's the other thing I'll give you with the administration. The administration is
because of their free
finish my
market,
talk.
because
Shut
of
up. Stop. Let me finish, please.
All right.
I don't cut you off.
Yeah, you do.
When you look at it, the one thing that this administration has done is taken some of the incentives away, which were propping up, the solar and all the batteries and even Tesla, and obviously you saw Elon and Trump kind of getting a little scuffle. And I have to believe some of that was because, well, you took the cookie away from Elon, and sorry, like, you're not getting free cookies anymore. And, yeah, maybe that does slow down innovation because there's not that free dollars going out there. But, those free dollars, just so come from taxpayers. They do. And I'm not saying, anything's changed there where this administration is doing anything, really outside of the big, beautiful tax bill to help, mitigate the deficit and the spending of the government. But I'm just simply telling you, innovation doesn't come from the government. It comes from private industry.
Innovation can be helped out with government grants. Additionally, the oil companies, the coal companies also receive massive subsidies from the US government.
Correct.
So when you bring up this particular line of reasoning, saying that, it's not government, it's all private capital, I feel that that's an incomplete statement. And China, I've done a lot of research on this. Maybe there's more to do, but we have proof right now, because China's leaned so much into electricity, that their solid state batteries, which are lighter, have longer charging cycles, meaning they hold top charges for a longer period of time. Their degradation is a lot slower. They're light years ahead of us in that, because they've transferred so much of their industry over there. I'm not saying that it's completely this administration's fault. I'm saying that it's something to keep an eye on about this. And if we stay within our traditional energy model, which can incorporate all types of energy, we will fall behind.
Well, yeah, and if we listen to people like Bernie Sanders, one of the worst politicians and people in the history of this country, but nonetheless, he is out there saying, we need to stop all of the data centers. We need to stop and take a step back. Yeah, let's just let China and India and everybody else in the world take us over, and we just fall behind all of them. Great idea, Bernie, you complete useless person. Anyways.
And somebody made a comment, why are we always in a race with these other countries? And I kind of like that, because I don't think we are, and I like to believe that the United States is not chasing what the other countries are doing. I do agree that China has been innovative. I mean, they're communists. So, I mean, I don't even know if you can believe anything that comes out of their media. Right. But nonetheless, I mean, like, I don't think we should be in a race with other countries. I think we should, look at what other countries are doing, but just keep pushing forward with what is working for the United States of America and become what we were back during the Industrial Revolution, but now with AI, data centers, and all this, which is seeming like that's the direction where it's going. And then Craig had mentioned, what about the toxic waste? Again, they got to figure that stuff out. I'm not an expert in that, so I have no idea. But yes, there's toxic waste, batteries, like what are we doing with all the batteries in the electric cars? There's still no real viable solution for that. We haven't really even got to that point yet because the batteries are still good, but they'll figure out how to, and before you say that, James, they'll figure out how to recycle the batteries. They'll figure out how to make it eco, they'll figure this stuff out. It just takes time.
I definitely have that ambition as well. I hope for that. And we're saying, like, why are we in competition with other countries? That brings up a great point, because where innovation leads, high market caps, profits follow. So let's just say that America didn't develop Google. What if it went to Canada? What if it went to Mexico? Just hypothetically speaking, that's a tremendous amount of growth GDP, global GDP, that flows into the United States because we have Google. But if that goes to Canada, well, America becomes weaker. And I think all of us want to have a very, very strong economy. We no longer live in an isolationist level of society where we can just close off our walls and say, you know what, the rest of the world can do what they want to do, because we're so codependent, so to speak, on international trade. And when America has a strong economy, our dollar is reasonably strong, well then, and people trade within US dollars, it's based upon the faith of the US economy. So that's why we need this innovation, and we need strong people to be here and to continue to innovate.
I couldn't agree more. I totally agree with that. I mean, those are all things we need, and those are things that I think the United States does really well. I mean, people want to live here. People want to move here. People don't want to move to China. Like, I don't know anyone that's like, oh man, I can't wait to move out of the US and go to China. I don't know a lot of people that are like, I can't wait to move out of the US and go to Europe or Canada. Like, I see a lot of Canadians coming here to the US, but I don't really hear too much. And it could be happening, but I don't hear too much about Americans being like, man, I can't wait to move up to socialist China or Canada. I just don't hear it
right now too. Europe's not doing good right now.
Europe literally, I think, mark my words, I think in the next decade, Europe's going to fall.
Yeah.
They made some critical errors and too much reliance. And I don't even fully know how they got on such a bad, shaky ground, but they're freaking a mess. Like, and you can look at economists in white papers that talk about this, like, they're screwed. That's all there is to it. They can't come back. I don't know how they could. But let's move on. That was a good session. Thanks, gentlemen. But let's move on to the USA and kind of get more focused on what's happening here on our soil.
My fellow Americans.
So you know the thing. All right, so this one is an interesting one, and I'm going to give you my take, and then I'll let you guys kind of comment on this. But, we always track the job reports because they are a good indicator of where we're at economically, and it's just a good thing to look at. But I just truly don't believe any of the job reports anymore. No matter who's in office, I just don't believe the job reports. They're always being revised. And if you remember, there was like that $1 million overstated, clerical error, if you will, that they made that definitely, like, you got to realize, like, the Bureau of Labor Statistics, I think, is full of shit, or just has they're kind of like weathermen, like The weatherman can say it's going to be an ice storm. It's going to be 20 degrees, and you wake up and it's sunny and 60 out. It's just like, and they're like, well, we took an educated guess. We thought we had it right. We got it wrong. They're always wrong. It's okay for them to be wrong. I think that is like the labor statistic. But nonetheless, January's data came out on February 11th, and here's what it said. The non-farm payroll increased by 130,000 jobs, okay? If I just said that, and that was the news headline, you don't know what to make of that. 130, is that good? Is that bad? But then you go on and it says far exceeding the consensus estimate of 55,000. And you're like, oh, wow. They were only saying there was supposed to be 55,000 new jobs and there was 130. That's super good. And what the analysts are saying is that this largely has to do with the Fed keeping interest, or will largely have to do with the Fed's decision as to whether or not to drop interest rates. Now, I don't believe that last statement, because with Powell going out, new guy coming in, sorry, I forgot his name. I think we clearly can see the path with interest rates is to steadily decrease them. But I don't know. I mean, from the surface, this looks good. It looks like the economy's, strong, 130 versus 55. But the thing I would say is, where did the 55 come from? So I would dig deeper. I would unpack that. I would say, okay, so how'd you come up with 55,000? What was it last January? What were the numbers supposed to be last January and the January before? But you see, that's the thing, is they always take everything from a snapshot in time, and we just have to articulate, well, I don't know. I mean, 130 is better than 55. Hurrah. Let's go have a beer. Like, economy's good. Things are good. Let's keep our money going into our 401ks. Anyway, done with my rant. James?
Absolutely. Well, you know what? I think it's very important for us to understand what the jobs report is all about. It's a voluntary survey. So if a certain amount of companies actually don't even report into the survey, we end up with these massive inaccuracies and revisions. So it's kind of like it's a bad compass that sometimes points south when it should be pointing west or something like that. And since it takes time for it to revise, because they have to take into unemployment insurance data that comes in from the states, it seems like they really should just wait until they have this total amount of economic data so that they can have a more accurate representation of what the job state is as well.
That's a novel idea.
Just wait. It doesn't have to be a rush. Like, it isn't like a lot of people out there really clamoring like, oh my gosh, I gotta hear what the jobs report is. Oh my gosh, like, nobody's waiting for that. We're more concerned about more fundamental things, like, what's going on with Pokemon cards or something like that. But we are seeing that there's a lot of conflicting information with jobs report, and without the absence of like an actual benchmark stat. How are we year over year? How are we from one month to the next? A lot of people just get lost in these headlines. We have seen, by far and large, is that new people getting into the jobs market with college degrees have had trouble finding entry-level jobs. That's what the general consensus has been so far. And yes, we're going to see a lot of people who are going to be starting up entrepreneurial activities. We are going to see people who are going to try to get in on a lot of the aging boomer population of people who are trying to retire from certain jobs. But overall, it's saying that we do need a little bit of a kick in the butt in that, and maybe lowering interest rates will help that. I'm not a big fan of it as of yet. I still feel that there's a lot of lag in this indicator in terms of the raising and lowering of interest rates, but that's why I don't sit at the Fed chair.
Well, let me just say one thing before Stephen goes. I'm with you on interest rates. I don't think interest rates should be pulled just to pull them, just to make things cheaper and easier and keep the economy propped. I almost feel like that's the administration trying to get ahead, keep the market propped up, because like the market's going to go where the market's going to go. I think we all know where it's going to go. At least I hope you all kind of have an inkling. We just don't know when. And I think a lot of this propping up, which is largely kind of keeping interest rates coming down, I like it. It makes borrowing cheaper, makes the real estate market come out of the deep freeze recession it's been in. Like, there's some pros to it, but it also shows the ugly teeth on the other side, which is, I think, the thing people need to understand. When the Fed drops interest rates, although you might look at that as a positive thing, you might think, oh, wow, I can borrow cheaper, real estate's getting back on hold, but it's a very telltale sign that where we're headed, you're not going to like. And you got to take the good with the bad. Stephen.
Yeah, all I know is James said Pokemon, so let's talk Pokemon for a minute. Logan Paul sells the holy grail of Pokemon cards for $16.5 million with a nice little diamond bezel thrown in to hold the card around his neck. But just to give you an idea, he set the record 5 years ago at $5.275 million. Proved to be a sound investment. It just sold off for $16.492 million. And it is a record for the highest Pokemon card sold, as well as the highest price for any trading card ever in history sold. So beating out those old Mickey Mantles and Yogi Bear cards and the rest of them. So there you go.
Chris, I know that you were a big trading card collector in your time. Did you ever think that you would see a day that a card, not a Hogness Wagner, not a Mickey Mantle, not the Bambino, a card would actually go for 16 million?
No, but I also would question, could that card have sold from 16 million if somebody other than Logan owned it? There is the question.
Exactly.
It is. The guy that bought it believes, I heard him talking, he believes it's going to be $100 million card in the future.
It's very possible, but he's trying to collect some of the crazy thing. It's Scaramucci, who's tied with Trump's previous administration, excuse me. He's looking to buy an entire dinosaur. He's also looking to just buy the Declaration of Independence. He's a private equity guy, and if anything, that just shows that this guy has a little bit too much money, and maybe he's got good brains in certain parts of business, but I'm not trying to buy a dinosaur, because what are you going to feed it?
I like this comment up here on IG. Nature Guy 83 said, as someone who is both blue, i.e. landscaping, and white collar, a professional, I will say on the construction side, it's a mixed bag. The higher end, not looking good at all. And it's kind of, it looks like it was a talking text, so maybe some of that didn't make sense. But basically he's saying that on the higher end of construction, like, it's not looking good. And construction typically is a leading indicator, just like shipping is. There's a lot of leading indicators, but when you really look at it, construction is one of them. So if construction starts pulling back, especially on the higher end, that's going to show you cracks in the foundation and give you a better inkling of where we're headed.
Absolutely. Hey guys, can we call an audible real quick? Chris, I want to say that there's a story out there that I think you're really going to like, and you're going to kind of feel a certain way about this. Nagy, maybe you can pull this up, but rent controls in Massachusetts. Have either one of you guys heard about this yet? So what they're introducing, there's an actual little bit of infighting between the Democratic Party in Boston, the mayor versus the governor. And what they're trying to do is institute rent controls where landlords cannot increase their rents more than in like a half point above inflation. And there's been an economic model that shows that this does not work. And they actually used the idea of what happened in Minnesota, whereas, Minnesota and St. Paul are the twin cities right next to each other. And the city of Minnesota itself said, you know what, we're not going to do any rent control. We're going to let the free market have it as it will, versus St. Paul, which did institute rent controls. And I think you can imagine what happened. So, Chris, you being in real estate, what are your feelings on rent control, and how could that help or hinder the real estate industry?
I think it's awful. I think there should not be rent control. There should be incentives for builders and developers to develop, affordable housing. And then they can have, some controls on the affordable housing side, or just, because obviously affordable housing is mostly going to be subsidized rents. So I think by them doing rent, when has rent control ever worked? It's never worked.
It's ironic though, because in certain cities, there's over 11,000, I think it's actually in the Boston market, there's 11,000 vacant rentals. And if some of these landlords are willing to take these losses as opposed to lowering rents, then where is the disconnect? Because we already know Boston's one of the most expensive cities in America. We know that New York is extremely, extremely expensive. And Mamdani is now having this bit of conflict as well with Kathy Hochul, where he wants to raise taxes. The first property tax increase, I think, it was about 20 years. But what's happening is, obviously, a lot of people are like, well, look, like, you can't raise taxes and do all these things talking about you're going to tax all these billionaires, but everybody's going to end up paying this particular price. So I know Chris and I, we kind of butted heads about Mamdani being elected. But the question now, the issue is now, is we agreed to wait and see. I wasn't completely sold on his idea of everything that was going to be free. And Chris said, hey, look, I don't like this guy at all. I think his whole thing is screwed, and we're looking at New York just being screwed as well, especially when they uncovered that, was it $3 billion in shortcoming in funding?
Here was him yesterday talking about how he's going to fund this stuff.
Would rather do is ensure that they remain as they are, so that the city can be on firm financial footing. However, in order to get to this point of closing the gap on both this fiscal year and the next fiscal year, we are forced to raid the rainy day fund, the retiree health benefits trust reserve, and to increase property taxes across these other years.
Well, hey, like that. Hey, great. That's great. Let me skip ahead here. Zuckerberg and Ellison just moved to Florida. Why did they move to Florida? I mean, California is so beautiful, right? Well, he moved to Florida because California, has crazy amounts of taxes, and California is taxing the wealthy. So he's like, piss on this, I'm out. Like, that's what's going to happen.
What I like about Mamdani is at least he's being transparent about the budget and providing this so that everybody can scrutinize each and every single number. We know that how many government decisions are made behind closed doors. We see, all of a sudden that we just happen to have this shortcoming. And before you think that I'm, necessarily flipping sides, we also know that there's extreme poverty in some of the traditional hardcore red states as well. Now, of course, people are flooding to Florida because they want to escape the billionaire tax, where 5% of a billionaire's net worth is going to basically be taxed. And for somebody like Mark Zuckerberg, who is worth $250 some odd billion, that's almost, if memory serves, that's like about $11 billion right there. So of course, why would he want to give that up? All he has to do is transfer his residency and say, hey, I live in Florida now. Is he going to permanently relocate to Florida? Absolutely not. Because the headquarters of Facebook is still there. The intellectual capital of the tech world is still in California. He's just saying, hey, look.
It's like every New Yorker that moves to Florida for, what is it, Stephen, 6 months and a day? I think is the rule. And then they say they got residency. There's a lot of rules behind that, but that's what he's going to do.
Right. But Florida as a whole, I mean, Nagy, you can speak to this. Housing insurance, it's extremely expensive right now. The government really doesn't collect on that. I believe it's actually private industry. What props up a lot of Florida, to what I've been explained to so far, is their massive tourism industry. But not every single red state can do that. Texas, which also doesn't have a state income tax. What props them up is the oil industry. Nevada, no state income tax. Well, they've got the gambling industry, and that's been kind of diminished decade over decade. So the question is are all of these no tax models going to be sustainable long term?
What's California's excuse? California is could have the best tourism in the world. If they, people wouldn't mind paying the taxes if they felt like the taxes actually provided value. The problem is they know that it doesn't. It goes to the fraud, the abuse, the freaking scams, the crap,
the bureaucracy
on our streets. There's homeless people everywhere. Nothing gets better. Taxes keep going up. So we're done with it. We're out of here. And that's corrupt Democratic politicians, period.
The only thing is that I would say away from just corrupt Democrat, because every political party is corrupt.
Not just Democrats.
It's definitely everybody that's corrupt. And I agree with you guys. I do agree that there's massive issues in California. There's massive issues in New York State. There's, as I just explained, there's a strong growing issue that is in Massachusetts as well.
Is it safe to say that there's massive issues in more blue states than there are red states?
Absolutely
Would
not.
that be an accurate
Absolutely
statement?
not.
It's accurate.
Absolutely not.
Yeah, I think that's 100% accurate.
Well, let's look at this though.
I have not researched that. I want to be clear. That's just my opinion.
What's going on in Virginia is wild, dude. Pull that up. Maybe next week.
Okay, but I mean, if we're looking at in terms of literacy rates, education rates, in some of these traditionally red states that do not have a high tax base, they're not able to pay the teachers. The students then end up falling through. The students then
agree
end up
agree with that. Yes, education in the blue states, especially like New York, is significantly better.
Yeah,
measure that.
Although it's still pretty shitty. It's significant.
Mr. Ruler, I talked about all states.
Regions.
Thank you. Thanks, Declare.
Here in New York. All right. Well, let's push on to something more fun, like consumer delinquencies reach a decade high. I think this is a fun topic. This is a great one, actually. Shows how strong everything is, listen, like, I voted for Trump. I like the Trump administration. I think it's significantly better than what we came from. You don't have to agree with me or disagree, but like, there's a lot of things I don't like about the Trump administration, like how we can call them white lies. You can call them whatever you want. How he constantly is saying everything is so strong. The economy's so good. Everything's great. The market's reaching, and it is, but how much of that is speculation and propping? But like, consumer delinquencies show the true sign. I mean, this is the highest level in nearly 10 years. People are not paying their bills. They're not paying their loans. They're not paying their car loans, their student loans, their credit card loans, their mortgages. Like, it's all delinquent. And that comes with, quote unquote, believe it or don't believe it, some of the strongest job reports we've seen on Main Street. And, like how just the two don't match. Wall Street and Main Street are not lining up. And this right here, these delinquencies are telling the story. So, like, I hate the white lies. Just tell people, like, hey, these things, these are problems, but like, it's just this candy coating. And I'm going to add one more thing that like really has me pissed off. And it is, all this, the child trafficking, all this, the Epstein file thing. I don't really look at it too much, but it's just like, there is no excuse for anyone to be alleviated from this, if they're connected with child trafficking. None. There's no excuse whatsoever. I don't care if it crashes the whole system. Then the system has to crash and start over. Like that should just be the line in the sand. Like, that's it. And it isn't. And Trump is, in my opinion, not doing anything to actually get to the root cause of the problem and solve it. Now, maybe it's a bigger problem, but I don't know. That's my stance on it. And I just pissed off that nothing's been done about that. And, it's just like, we know the people who are involved. The list is out. The names are out, and nothing's being done. And nothing doesn't seem like anything's being done with the Minnesota issue, the daycare centers. It's just like, at what point do the white collar crimes actually have to pay the price? Like, at what point do the politicians actually have to go down to make an example so that we don't have this continuing problem? And you know what? Maybe you might say daycare centers, whatever, bury that one and all these other things. But like children, that's the line in the sand for me. I'm sorry.
No, definitely nothing to be sorry about, because it's unanimous. It's bipartisan. Nobody wants to see children trafficked. We live at a major border. There's a tremendous amount of child trafficking that happens in Western New York, unfortunately. And I talked to border guards about this, and they said, the two biggest things that we have to worry about is actually child trafficking and the import-export of like stolen cars, not drugs. It is people and cars. Go figure. At this border,
someone would steal the Tesla. I wonder what the insurance.
well, they can't, because they can cut it off.
I know. You
it's
can't.
A double-edged sword now, right? It's a double-edged sword. Like, you buy the electric car, okay, cool, it's stolen, we can cut it off for you, but that also means we could cut it off on you. But getting back to this, yes, it has been unanimous for people who have been even the most staunch conservatives, all the way to the most blue-haired of all liberals, has been like, let's just see everything, but let's put all of our cards on the table, because Americans do want the truth about these things. And kind of pulling it back to what we were talking about, consumer debt. Well, I mean, I hate beating a dead horse just as much as you guys do, but let's face it, we got accustomed and used to spending with a lot of this free-flowing money that we had over COVID, which, yes, I agree, it was overprinted. Maybe we did make too much, but I guess the idea was it's better to have too much as opposed to too little. And it's been an echo effect ever since then. People had an overinflated sense of how much how much money they actually had. But now this is a prime opportunity for a lot of Americans to learn how to pull back. And that's why what's good about a company such as BYOB is that we show you how to get wealthy from your own debts and expenses.
Yeah, I mean, that's a good comment right there. Who's going to pay when there's no consequences for being delinquent? Well said. Who's going to stop, breaking into people's businesses when there's no consequences, when you just allow stealing? Who's going to come, where does it go when there are no consequences for the actions? Right. I think is basically what you're saying there. And I agree. And then Steeper said Trump needs to push more. Trump needs to push a lot more.
But Chris, have you seen the Dow? Have you seen the Dow?
Oh, I know. I listen, believe me, like, that's why I don't watch. Literally, like, I feel terrible for all the watchers of this, because I just don't watch the news anymore. Period. End of story. I don't. I read some white papers, and I kind of try to talk about the economics of it, but I'm not playing politics anymore. I can't stand it. I hate it. I'm just done with it, because it's just someone, it just, Eve said, pedo narcissist. I mean, there might be some narcissism going on there, and is he guilty? I don't know. His name's mentioned in it, to what extent, but like, listen, like, I think there's gotta be some accountability. There's gotta be, and it just gets buried, just like, but this isn't the first time. Like, go back to, Nancy Pelosi. Like, I know we joke around and say she's the greatest stock trader of all times, but like, no accountability there. That's fucking insider trading. There is no ifs, ands, or buts. Like, and that happens. I'm just picking on her, but all of them do that. Zero consequence. So like, there is no consequence for them screwing up, you know, and I don't know, something's got to change, but who am I? I'm just going to keep reading the Serenity Prayer because it just keeps me sane and focus on what I'm doing because I can't control any of it. You know, it is what it is. It's going to happen as it's going to happen, but you can believe what you want. You can stand up for what you want. And I think that's just the only thing that we can and should be doing is standing up for our own beliefs. And that's where that ends there. So to move on, just in the sake of time, did you have something you wanted to share?
Oh, no.
I was just going to say, congratulations. By the way, Nancy Pelosi did beat in 2024 the inverse Kramer.
What? I thought for sure Kramer was going to
I thought Kramer won.
This was 2024. Inverse Kramer came back though last year and beat Pelosi by a few. So
okay. We gotta. This is what we should be talking about every single week. We should be talking about what is Pelosi and the inverse Kramer investing in. Or what did Kramer say on his last show that you should invest in? Do the opposite.
Yeah, 48%.
Yeah. Anyway, let's talk a little bit about, Stephen. I want to bring it over to you, you know, with the US dollar and gold, because gold has had a little bit of a pullback. The high was a little over 5,500 and it's down now under 5,000. I know that's not a big pullback compared to the major pullback in Bitcoin, but anyway, go ahead.
Hey, listen, I have no idea what's driving these metals. It seems to not be correlating the way it has historically with the market and whatnot. I don't know what's going on. It's interesting to watch. I mean, if we look at over the last couple of years, I mean, we could pull out 5 years. I mean, gold just kind of been chugging along, you know, around 2000, just under 2000. You know, in 2024 started to see an increase, but just this hockey stick, you know, from the beginning of 2025. I mean, pretty wild to see. I mean, silver, even greater drastic turn. I mean, Bitcoin has always been interesting. I mean, lots of ups and downs in Bitcoin over the years, but I don't know. I don't understand it. I don't know what's
the
going
only
on.
thing that's going to give stability to the crypto market is the government, you know, when they're already making moves, you know, with the you know, the Clarity Act, which they just had a meeting, and it wasn't anywhere in the news, but they just last week had a meeting about that. You know, I went in, I bought XRP because I felt like that was a good play if they're moving forward with the digital dollar, which they kind of have to, because that's the only thing that's going to give crypto stability. Otherwise, you're going to have this massive volatility. You know, the digital dollar, let me rephrase that, not the digital dollar, stable coin deposits is, sorry, I misspoke, stable coin depositories in traditional banks. That is going to give stability to the crypto markets. And if we're going to push toward that, that's got to happen. And they got to move that really quickly. So it'll be interesting to do that. If any of you want something pretty fascinating to kind of wrap your head around and try to learn outside of red, blue, Trump, Biden, well, we don't really even I don't even think Biden's alive, but that's just my opinion. I don't think he was alive during his presidency either, but anyway, that's conspiracy theory stuff. But nonetheless, I think we just, if you want something really interesting, study the Genius Act, study what's going on with stable coins, study what's going on with the Clarity Act, which they are still meeting. They just had a big meeting last week. Like, it is pretty fascinating. And it is the future. So I think you kind of take your mind off all the negative of politics and just put your mind into something like that. I think you can learn a lot, but I think you can learn a lot and also get ahead of some things that will make you a bunch of money. You're going to make, just so you all know, like, we are always about money, right? That's what we talk about. The truth about money, how to make your money work for you, how to take back control of money. Politics doesn't help you at all make more money. It just pisses you off. It just puts you in a bad mood. It just literally pins you against the other side or against the other person or against your neighbor, you know. And if you just ignore the politics, I've found a lot of clarity. I've been quite happy about it. Like, you know, I can come on here and me and James don't have to argue. If we talk about Mondami, we're going to argue, but that's not politics. That's just semantics. But I mean, when you really kind of get away from the politics and you just focus on tangible things that actually matter for you, it's a lot better place to be in. I don't think we're going to get there, but I want to kind of finish up with one final thing because I think it's really worthy. So we're going to go to that just. What the Y'all know him. Hopefully, y'all love him. Pretty interesting human being. I've read a lot of his books, but this is his final quarter. Like, this is his final quarter, or it was just his final quarter. Sorry. It was just his final quarter. And as the CEO of Berkshire, he went in and rebalanced the portfolio again. This is another telltale sign. Like, number one, how much cash he's still sitting on. He hasn't redeployed that cash, just so you all know, because he says the same thing I'm saying, is it's safer to sit on the sidelines and wait for the opportunity to just be brought to you instead of hunting it down and trying to chase, these false rumors or whatever. But he trimmed his Berkshire Apple stake. So I like that Stephen brought that up about Apple spent basically nothing. And Stephen, I was confused when you said Apple went with Gemini. I thought Apple went with ChatGPT. Why did I think that? Anyway, nonetheless, they trimmed it and he sold over 10 million shares. Apple's still one of the largest holdings with over $60 billion in Apple stock, with Berkshire Hathaway, but he's trimming the portfolio and he's not taking the money and putting it into new stocks. He's definitely not doing what the masses are doing and putting it into the S&P 500 because Kramer or somebody else told him, oh, you should put your money in the S&P 500. Graham Stephan, no, don't mean to throw him out because I like him a lot, but he's always telling people, oh, put money in the S&P 500. I get it from a dollar cost averaging standpoint, but like, I don't think you should be taking chunks of money and putting them in the S&P 500 or any stock for that matter. Steven, what do you got here?
Yeah, just what you're talking about. So Apple entered a multi-year partnership with Google to integrate Google's Gemini AI and Apple Intelligence, strengthening Siri and other features announced in just this last month.
I think that was a really good move. I don't know why I thought it was ChatGPT. It's just, just looked at the wrong thing. James, what is your take?
So I wanted to research what you were talking about there. When the first wave of artificial intelligence came out, Apple did initially go with ChatGPT while they were thinking about going with their own LLM. But then they said, all right, let's stop. It's not really working out. This Apple Intelligence just isn't panning out. So we are going to switch to Google. So they started with one initially, and then they moved on over to Google, which has been, kind of interesting because on paper, they're competitors, even though Apple is more of a hardware company, whereas Google is a little bit more of software. And to get to what you're talking about here with traditional media, I don't understand why Buffett would do this. I know the New York Times is a huge, huge brand. It's known, I think, essentially worldwide. And we also know that traditional newsrooms have been shrinking while independent journalism has been growing. So I have no idea, you're reducing your stock position in a company that like Apple, which is worth over $1 trillion, to put it into the New York Times. Now, if it's a passion project and saying, hey, look, I'm Warren freaking Buffett, where I put my money, other people will follow, and it'll instill more faith into the New York Times. Hey, great. That sounds awesome. But I just don't see that because now we're seeing journalism as influencers growing more and more, and that's outside of the New York Times system. Think about it. When you are under the umbrella of the New York Times, you are now subject to a lot of influence from sponsorships. You're subject to whatever the political playings of that particular publications are, whether it be left-leaning, right-leaning media, or something completely different. So I'm still trying to figure out what his play is on this. Not that I doubt his expertise, but I think that this is more about him saying, look, I champion this type of media, traditional media. We know that he used to own, for instance, the Buffalo News, but that didn't really.
Here's the thing, James, let me just explain that.
Please.
You're talking about Buffett investing in New York Times and largely because he's old fashioned. He's just fundamentals, and New York Times probably has good fundamentals. From the standpoint of what he paid for it. I just looked, it was trading at just a smidgen over $74 today. Yes. So let's just assume today was the day he invested, and bought 5 million shares. You're talking about $370 million. To him, that's like me and you investing $100. Probably like us investing $10. When he sold, he sold over 10 million shares of Apple. So let's put that into perspective. What is the value of 10? I got to make sure I do enough zeros. 10 million shares of Apple. Going to be a lot of zeros here. You're talking about 2.71 billion. So see the difference.
He's sitting on even more cash.
20 million, 2.71 billion.
That's
just trying to keep this.
That's a great
stable and about the math.
Because I mean, I don't know, man. I like press. I like journalism. I don't know if I like it 200 some odd million, but would I put $100
He
in?
likes the SaaS. He likes the SaaS model, and old newspapers like that. They do have lots of assets, and they probably have strong. They probably have strong fundamentals. I haven't looked. I would never buy New York Times, but that's just me.
Yeah, absolutely. Well, I mean, a lot of these billionaires have bought, major press outlet.
Yeah.
Obviously, we have Bezos with the Washington Post. I think Ellison purchased a whole bunch of media companies. So there's a lot to say. The New York Times brand itself is very powerful.
Strong brand.
So I'd like to see what he can do with that. If he's, he doesn't own that much, but he owns enough.
I want to finish on this one final thing. Waymo, one of those robo taxi things. I won't get in one of those, but nonetheless, there's a new gig. So if any of you are looking for a side hustle, this is it. This is, if it's not becoming a tow truck driver to go out and repo cars, that's a great business to be in right now. This might be your second side hustle. So right now, Waymo is paying DoorDash gig workers to go around and just close the door on their robo taxis, because guests are getting or passengers are getting out of Waymos and leaving the door open, and then the Waymo can't go anywhere. So, for the short time only, right now, get it while the getting's good. Go around and shut the door on Waymos, and you'll get paid.
Absolutely.
That's all I got. Good little side hustle for those of you that don't want to be delinquent.
You can also go and protest some of that stuff, and you get paid pretty well too. So,
professional protesting, I hear, is quite the profession these days. And I think Yale actually has a program that you can sign up for and get some credits to become a professional protester.
In real news, though, keeping an eye on just developing today. Biggest U.S. military buildup since the 2003 Iraq War. These are all tankers kind of moving over towards the Middle East in a big show of dominance maybe to deal with what's going on over in Iran right now. So just something to keep an eye on today and moving into this week.
Yeah, the Iran thing is definitely going to be big news for the next couple of weeks. And Damien was, kind of basing his market analysis on how many ships are being sent out. And I think a lot of them are heading over the same place as what you just showed. So Interesting times, folks. Interesting times. Good old Iran. Anyway, that's about it, folks. I know we're a bit over, but thanks for joining us for WTF. Now, listen, for those of you that are still here, you got to join us at 1 p.m. today. I'm going to be doing like a special wealth webinar, a personal wealth webinar about something that I just did. And I think every single one of you need to see this, because it's very powerful. And it's something we've always been saying, but it just puts a different spin on it. And it's absolutely something that will change the way all of you look at buying cars, and why the infinite banking concept should absolutely, contrary to what some other folks say on their podcast, absolutely should be your preferred choice of buying cars. So join us 1 p.m. Eastern. If you want to register, go to Chris Naugle, NAUGLE.com, and go down and sign up for the wealth webinar. It's totally free. 1 p.m. Eastern. Do not miss it.
I just want to vouch for that too. Usually, our team puts a lot of time and energy into developing wealth webinar each week. And Chris this week was like, I got it. I got to share this. I'm leading the way. You guys don't got to do anything this week. Let's go. So it's going to be a good one. I'm looking forward to it. 1 p.m. Eastern today for sure.
Awesome. Well, thanks, St. James. Thank you to each and every single one of you. Thank you up here. We only had one person on Instagram commenting. I want to give a shout out to the professor. He's actually a professor. Natural Guy 83. Give some love to him for joining us. And thank you to everybody down there on YouTube, Facebook, and everywhere else we're streaming on this. Thanks for joining. Thanks for your comments. And we apologize if we didn't get to them, but join us next week and we'll try to do it then. Until then, see you at 1 p.m.
Ow!